Hey, I think we're on the big picture. How does this sound? This is gonna go great. How you doing, Chris?
Hey, Grant. Hey, great to see you. And yeah, excited about today's show.
I'm very excited about today's show. We're gonna talk about some things today that some things that just been on my mind. I've been watching the stock exchange, the Dow, the Nasdaq. I don't think a lot of people are that familiar with how the stock market actually operates, and then some of the bigger businesses that kind of dominate in the space. And I've heard these terms tossed around, Magnificent Seven. It's like Magnificent Seven. It sounds like a movie, right? Like, what is the Magnificent Seven, right? And these seven companies, and I'll let you elaborate on these seven companies, they dominate nearly 30% of the US stock market, and they're tech stocks. 30%, that's no small number. First, introduce yourself a little bit, Chris. Tell us a little bit about you more and more so people understand that. And then let's get into this discussion about the Magnificent Seven.
Hey, Grant. Really, I really like this topic, and I got a couple of clarifications to do for you on your lead in there, which was opening up a lot of things for us. But my name is Chris Principe. I am the publisher of Financial IT, career international banker, and financial technology uh, person who just loves this whole industry. So, a couple of quick things. First, I want to make really clear, Grant, and I'm sure you do too. We are not giving out investment advice here.
Nope.
That's not our job. Our job is to take some complicated subjects and make them sound simple, and to give some opinion on the things that are going on and the things that we like to talk about. Now, back to what you said. The Magnificent Seven, quite correctly, Grant, is a movie. It is, and it's a movie I remember seeing when I was a kid, and it was a 1960 movie that was a western,
Yeah.
right? And I remember, I don't know, people, maybe you have to be from New York, but uh, we had Channel 9, which used to have a movie show called The $1 Million Movie. And I remember watching The Magnificent Seven. It was one of my favorite westerns, still is. I've seen it probably a dozen times. So that's the clarification on the movie part. You're 100% correct. Definitely a movie.
Yeah.
Now, the other part is when you say that they're 30% of the Magnificent Seven, which are tech stocks, and we'll go through the names in a second. But when you say they're over 30%, got to clarify just a little bit, because they're actually, according to last week, are 34%, but of the
I'm way off. I'm way
right,
off.
but of the S&P 500, not of the
Okay.
whole stock market.
Got it. Got
I
it.
mean, the whole stock market to be 34% would be truly dominant. Truly. So, Grant, let's talk a little bit about who are the Magnificent Seven. So,
Yeah.
yeah, I think a lot of people would recognize just about every one of these companies' names. And I'll go through the list, just really quickly so everyone knows who we're talking about, right? And there's Alphabet, which is Google, right? That's very well known, very large company, certainly tech. Amazon, equally well known, also very large. Apple, again, we're at the well known tech company. Meta, which is Facebook, right? You
Yeah.
might have heard of Microsoft. They're right
Yep.
up there, part of
Yep.
that
Yep.
Magnificent Seven. Now we get to the last two, which people may not be as familiar with, which is NVIDIA, which is the semiconductor manufacturing company, largest in the world, and really, I mean, some of the things that they're doing to be able to allow our technology to actually work is truly amazing. Particularly now they've gone very strong into the space of AI in building semiconductors for AI. And then the number seven one, it's kind of a little bit of a shift right now, because number seven had been for quite some time Tesla,
Yeah.
And everyone's familiar. Tesla makes the electric cars owned by Elon Musk. And it's always been one that's kind of struck me differently, Grant, and I'll tell you why. Yes, you could say it's a car company, but certainly technology is where they've made their mark in terms of the auto industry. But when I look at Tesla, I just personally, I just see an overvalued stock. I see that when you look at performance and you look at the actual numbers, that it's hard to justify the value and the selling point of those shares. Unlike the 6 previous companies I've named, whose performance either is at the place it should be for that kind of valuation, or maybe they're even a little undervalued. But Tesla, on I guess on the strength of new technology in the car industry and coming across electric cars, I would also say that Elon Musk and the ownership of X, or what used to be Twitter, also probably contributes to that. I mean, he's I don't know what he is today, Grant. Maybe the richest person, the second richest, the third richest. He's in that top 5 in any case, and he's somebody that's very heavily followed whatever he says, and that absolutely has an influence on the share price. You know, I grew up in New York City, and one of the things that I always heard from down the street is the market moves on rumor. Once something fact, it's too late. Don't bother, right? And Tesla, I think, has had an excellent run at running based on rumor, right? Now, today, though, there are a lot of people that are replacing Tesla in the Magnificent Seven with a stock called Broadcom. And Broadcom is, I guess we could say it's technology, but I guess
no, it is. They bought VMware. I mean, there's a lot going on in that space as well.
Well, so that's what we look at now. It's also kind of interesting, Grant, because a lot of people even narrow it down further, and will call the same group, less 2 of them, the Fabulous 5. Now, I mean, I grew up at a time when the Fabulous 4 were wonderful, and that was the Beatles, who was legendary, probably one of the all-time greatest, right? But here in stocks, we talk about the Fabulous 5, which are the first 5 I mentioned: Google, Amazon, Apple, Facebook, and Microsoft. So kind of interesting that that we have these 2 kinds of views at them, and one of the reasons why they do capture so much of the S&P 500 is both the size of the company and the tradings of the stock. So,
Chris, let me ask you this. This is interesting. So I think there's confusion in population and people around these types of things. You just brought up a great point. There's the S&P 500, there's the NASDAQ, and then there's the Dow. What is the difference between those 3?
Well, it's I don't want to say that it's competing companies in terms of how you would look at it if you were looking at industry, right? In some ways they're complementary, but it's really different segments of the same stock market, right? So the NASDAQ is the exchange that really encompasses most everything. I mean, you can go from the pink sheets all the way up to the Fabulous 5, the Magnificent 7, right? S&P 500, though, is only 500 companies, where it gets the name 500 from, and that is generally in the tech space more than anything, right? And the Dow is also an exchange that could be, so you can trade on all of them if that's what you desire to do. And of course, you have a very integrated broker community that executes and goes through all these trades, and you pretty much need a broker to go through these things. Kind of the interesting part. It's almost like, you need to be a lawyer to become a judge, right?
You're right. It's a little bit. So there's a lot of concentric circles, right? There's a lot of interplay between these things, potato, things of that nature. But kind of where's the money? Where's the best interest for your financial portfolio to be resting? What it looks like. Here's my question. And you've been around the block. I'm not going to date you, but I think you've been around the block a few times. Have you seen now with the rise of tech and in the balance shifting in global finance? I'm talking about over a lens 10, 20 years, where before those big stocks, were different names in different industries. How has the tax rise, shifted the power balance in global finance?
Well, Grant, it's very interesting because it makes me think about, if I go back to the early 80s, right, and think about what would have been the Magnificent Seven, say then, or in the 90s, right? Because it wouldn't have been any of these companies because none of these companies existed then,
Wow.
which is quite extraordinary. It would have been companies like General Electric, like General Motors, right? Like IBM.
Yeah.
Right? These are even companies like Kodak, or DuPont Chemicals or Dow Chemicals. I mean, any of these kind of really big, what we call heavy industry, dominated through those times. And if they had coined the term Magnificent Seven then, those are the names you would have seen. Wow, such a transition, because we don't see those names at all, which is kind of surprising to me, because if you look at, IBM, you'd have to call a tech stock.
Sure.
Right? Sure. They're not making the list today.
Not even on the list. Can you believe that? You never made a mistake when you bought IBM, AT&T. I remember Cisco was, definitely, that was a tech stock. It was definitely climbing. But in this new age of disruptive technology, you would say, the digital footprint, the digital ecosystem, and who has taken advantage of that of the last decade or so. And I say search and social. You say, what do you mean search and social? I mean, Google, right? There's your search. And then social is Meta, and then these two entities have become the gorillas in the room, more or less, right? And then how they're moving forward. And we're still in just an emerging technology space about who's going to dominate, AI. Now, Microsoft is sitting there with ChatGPT, but I'll tell everybody remember that word AOL, American Online? Like, is not that big a deal right now, right? They were overcome as the race toward this new tech emerged. I'm the jury's still out if that's going to be the dominant platform, but over time as more and more users, and that's people really dominate. I don't think we realize how much power we have as a collective on the overall market structure, because depending on what we choose and how we operate and how we behave, that is what kind of changes the dynamic over time. Would you agree with that?
Grant, and I like some of what you just brought up too, because it's interesting to me. Is in some ways any of that fabulous five you could put under the search and social, right? I mean, we can't do any of that without Microsoft, right? You can't do it really without Apple either.
Yeah.
And I mean, Amazon, you think about it as online,
e-commerce,
online market, but it's, for a lot of people, it's also a social space, right?
So we're just changing dramatically. We got to go to a quick break. We're going to come back, because as people think about how they go around their daily tasks every day, how are they utilized? What tools are they utilizing? And these are the tools that are driving these Magnificent Seven, fabulous five stocks. So we'll go to break. We're going to come right back. Thank you.
Set a case efficacy chain, also known as chain of efficacy, a digital chain. A chain is only as strong as its weakest link. Educate, efficiency, effectiveness, and evolve. So whether you are doing market research, studying, doing market analysis, or making a critical financial decision, get the latest breaking, developing market news in the cryptocurrency markets at www.efficacycoin.com. Efficacy Cryptocurrency News is powered by Case Capital Markets.
Reimagine a world where the Caribbean is seamlessly connected, where our people, our cultures, and our economies move freely across the islands. This is Connect Caribbean, more than a ferry service. It's the heartbeat of a new era, an era where economic opportunities expand, where trade flows freely across our seas, and cultural exchange flourishes. We are linking businesses, empowering communities, and reigniting the hope for a truly integrated Caribbean. Together, we're shaping a brighter, more unified future for the Caribbean. Connect Caribbean, connecting our islands, our people, our future.
Welcome back. Welcome back to The Big Picture with Grant McGaugh and Chris Principe. We're having a great conversation around technology, stock technology, behavior in the financial markets. I want to ask Chris, because Chris is my subject matter expert. He is a loving New Yorker, as I've been told earlier today, that New Yorkers are just full of this loving heart and this kindness. It just exudes from this area of the country. So, which is such a jovial personality. I want to ask you a real quick question, Chris, because I think it's important to understand what I just was alluding to earlier, how volatile these markets can be depending on consumer behavior. And from your view, is the financial system really prepared for how quickly tech can change as far as valuation models and risk, especially in today's world where things can change fairly rapidly?
Well, Grant, it's really interesting because tech does that to us. And we've seen, just over the last couple of decades that the changes come and they come quicker and they come quicker. And things we were doing yesterday are outdated tomorrow. So, yeah, that is really true. But when we talk about the Magnificent Seven, particularly the Fabulous Five, right? Mm-hmm. There are underlining consistencies between all five that will pretty much keep them in a dominant position for the foreseeable future. You know, they have, of course, good market centrics, right? So their numbers are good. Their ability to have business, and most of them, if you look at, it's repeating income type of business, right? And this is a model that Wall Street has come to prefer, right? Rather than a company that, you know, sells a product and then, you know, has to go back and look to sell another product. You know, people, you know, with Microsoft, I mean, you know, you buy and you have a subscription to their services, and you're just paying them. When you think about the hundreds of millions of people paying, there's some pretty good underlining numbers that substantiate what they're doing. Along with that, those companies have all done a very good job of investing into new technology, into new things. And whether that's organically, internally bringing up these things, for instance, as Apple has been a leader in doing, or it means by acquisition, as we spoke about with Microsoft ChatGPT, right? So I think we'll continue to see that out of all five of them, and possibly extending a little further. But that will keep them in this position for quite some time. And just to give you an idea of how that's working, you know, we mentioned just before, 34% of the S&P 500 is now those 7 stocks, right? In 2023, it was only 28%. So the year-on-year growth for them, you know, it's pretty substantial. And I mean, does it mean that we could see 50% of the S&P 500 just in those handful of stocks?
Yeah.
I mean,
I hear what you're saying because of what is. I look at ease of use. I think where their genius lies is that for the common person, like let's just say Microsoft, for instance, a Microsoft license costs you $6 to $10 a month. It's very affordable for a lot of different people. They changed their model. To your point, you used to go to a store, maybe you went to a Best Buy, you had to buy this operating system, right? The Microsoft operating system. You had to get the suite of products and whatnot, and it might cost you, I don't know, it was $100 and some dollars or so. But that $100 could be a threshold for a lot of people all at once, to where they're not going to go and buy that, you know, software, or they start to pirate it in other ways. They're like, hey, you got one, let me copy your copy. So like, hey, you know, we're losing market share, but you know what? Let's change the model to where it's pretty affordable, $6-7 a month. It's not going to kill anybody, you know. And they made the model kind of, you know, very secure. I like what they did when they did it, because they didn't understand what they were doing when they first did it. They went through this software subscription model, or software as a service model. And it was very, very smart. When you look at, you said Apple products. No, Apple iPhone, I think by itself may cost you close to $1,000. Well, $1,000 investment is a lot of money for a lot of people. However, if you break that down and you go to your mobile provider, right, your AT&T, Verizon, and what, like T-Mobiles of the world, and you can get that on a monthly recurring basis. They factor in the cost of the phone into your monthly payment, so you really don't even notice it. It may add whether $20 or something to your overall bill, and you can constantly upgrade. Here you go. You can constantly upgrade to that next model, and it's not a big hit to your particular bottom line. It was genius that they did this. You look at Amazon, they make it easier. You're not getting anything new by going to Amazon, but it's easier. I can go to Amazon. I can get it shipped in a couple of days. I don't have to get in my car. I don't have to drive anywhere. I pretty much know what it is that I'm getting, and they make it easier to send it back. Hey, this is not what I like. It doesn't work. You know, they've made the model for acquiring their services very easy. Now, I'm a little concerned about Google these days because of AI and what's happening. Does it have the same market share? You got Facebook and how it's dominated, you know, with social media and the ad space. Are people still utilizing, you know, those types of things? Most people don't pay to use Google. They don't pay to use Facebook, but they have people back then to help them, you know, continue to provide the service. So I think there's some volatility there. But these are interesting financial models that we're working with. And in a payment world, we're seeing innovation from these fintechs and how they're doing these things. Now, could any of them be a future magnificent stock in the future? Now, here's my question to Chris. As you look below the Magnificent Seven, you see these certain companies on the rise because of their models. We've talked about cryptocurrency. We talked about, hey, are you ready? You're not ready. I mean, are you starting to see some things in this fintech world that kind of piques your interest?
Well, Greg, a lot of really good comments right there, but I'm going to take issue with just one. When you spoke about Google and their model, if you're on Gmail, right, and you want to use the cloud storage, right, you probably don't even notice it that Google charges you $1.99 every month.
Oh, I don't. They do?
So and what you talked about quite correctly, we've gone from the software license model to the subscription model to now just the recurring income model, right? Where they really don't have to do anything and they've made it very easy. And it's the same as also, I like your example on the telephones, right? So yeah, Apple makes the phone, but it's through the cell provider that you actually buy the phone, and there they make it very easy for you by stretching out payments, right? It's a very similar model to cars, right? GM makes the car, the dealers deliver, and you pay the dealer for the car, and the dealer is not actually paying for the car, right? It's all financed. Same thing with the phones. T-Mobile's not actually buying phones from Apple; they're financing, right?
Yeah.
So you got this same kind of model that goes through. I mean, it's the same thing if you want to go back even further. I have a farm where I'm raising cows, right? But the supermarket is actually how you get your milk, right? I don't go to the farm and say to the farmer, I want to buy a gallon of milk. They'll laugh, right? So it's the same thing. So, you get this tiered model, which you could say yes, and it brings in the middleman, and maybe there's some cost there. But what it really does, Grant, is it makes things very affordable for people. Okay, and we've talked about this before. Basic mentality of people today, which I don't necessarily agree with, is how much is it per month, and that's the only question they have.
Yeah. It can be deceptive because it goes on and on and on. It could be a forever. But for certain companies, that's an evergreen. It's consistent. That monthly reoccurring revenue, MRR. Yeah. And when you start talking about valuations, how do you evaluate a company? What is their monthly reoccurring, and is it sticky? It's not going to be something you're going to just throw away and then that monthly reoccurring goes away. Most of these things you're consistently using. You're constantly using, like for me, I'm a Microsoft guy. I'm constantly using a Microsoft suite. I also use a Google suite also. I watched how the search engine morphed and changed and got smart. They were just a search engine. You just went on the internet and you search. They're not just a search engine any longer, right? That's just one of the things that they do. You mentioned with email. They got into the workspace, right? And that was Microsoft's world. Like, hey, you're playing in my sandbox, right? Well, when they came out with that suite, Microsoft really was a trailer in that world. They had to catch up to what Google was doing. And a lot of these technical enterprise application companies or managers and C-suite executives say, hey, this is a better model. I'm going to save money. I like the suite. I'm not dealing with a lot of complexity. I like this. Same thing with Amazon. People think of Amazon. Guess what? Most of their money is not made on logistics, on buying and selling products, right? It's really on what you call AWS, Amazon Web Services. Mm-hmm. This is the cloud, people. They supply the cloud. The cloud or the compute. They say, we got all this compute that we have sitting on the sideline. Why don't we just lease it out to other people that may need that type of compute and storage for their own use? Boom. AWS, you look at their balance sheet, they're enormous in what they do. So there's a lot that you can play in. So you look under the hood of this Magnificent Seven or this Fabulous Five. You say, oh, they have got all kinds of toys that are down in here. I want you to ask or talk about valuations. Now you're in this financial IT world. Do you see? You kind of talked about. You alluded to it with Tesla. Is it overvalued? Maybe it's undervalued. How do people come to those determinations of valuation?
Well, Grant, before we go to this, because I just want to do one quick thing, and then we'll go to break, and we can start up with that.
That's right.
Great example when you talk about AWS, right? So AWS is part of Amazon, okay? AWS became part of Amazon because Amazon realized they needed cloud services, so they started building their own. And as they started building their own, they realized that, hey, this is something that we can off-sell to other companies and build it up even more, right? So they really embrace this business of cloud delivery. Now, it's not the biggest money maker in Amazon, but it is the most profitable by percentage money maker by far. And right now in the world of cloud services, AWS is probably 40% of all the cloud services out there, maybe even a little higher. So they, by them having their need themselves and recognizing that, they kind of like had a business dropped in their lap that is huge and highly profitable.
Highly profitable. We're going to go to break. We're going to come right back. So we're getting into these juicy conversations. Thank you, Chris.
TravelShare. It Marketplace is an innovative, dynamic, user-friendly, and fully comprehensive global travel marketplace, featuring all Caribbean islands as a premier destinations. TravelShare. It Marketplace featured daily travel news, arts, culture, events, travel weather news, individuals' remote work, flex time, paid time off, family leisure time, and travel deals to better connect the U.S., Caribbean, and the Americas worldwide. So no matter where you want to travel in the world for work or leisure, working remotely or on vacation by yourself, with friends or family, whether by air or sea, TravelShare. It Marketplace makes it easy to get you to your destination. Book now at www.travelshare.com.
In today's fast-paced financial landscape, access to capital is the key to success. At the heart of this revolution is Case Capital Markets, powered by SETI-Case. Here, innovation and investment converge, creating a dynamic environment where businesses can thrive and reach new heights. Introducing Grant McGaw, the Senior Advisor at Case Capital Markets. Grant is a visionary leader, dedicated to connecting businesses with institutional capital and strategic funding. His expertise opens doors to game-changing investment opportunities, making him an invaluable partner for companies looking to scale and succeed in the competitive world of finance. With an impressive 25 years in technology, 9 years in healthcare, and 6 years in investment banking, Grant McGaw has a proven track record. He has successfully closed over $500 million in high-value transactions, seamlessly bridging technology, healthcare, and infrastructure with innovative financial solutions. His experience is a testament to his ability to drive success. Case Capital Markets offers businesses direct access to over 32,000 venture capital firms, private equity funds, family offices, and institutional investors. This network empowers mid-market companies with under $100 million in revenue to scale beyond their limits, unlocking unprecedented growth potential. Debt, equity, growth capital, public offerings. These are the building blocks of the future of capital access. Whether you're scaling a business, seeking investment, or exploring market expansion, Grant McGaw is your trusted partner. Together, you can unlock capital and create long-term financial success. The future belongs to those who take action. Are you ready to elevate your business?
All right, all right. We have returned, Mr. Principe. And first of all, thank you again for being on the show. You've been giving us some great, great insight. These are questions that really, have come to the forefront, and I think you gave some really good clarity around this. And we were just about to talk about valuation. Valuation, I think, is something that's very important. And you kind of alluded to some of these things even earlier about, in the world of Tesla and the story that Elon Musk, tells, because he has a great brand. I mean, people, whether you like him or not, he's a well-known figure, no matter what. And he, what he says, changes markets. I want to know, how important is like storytelling and leadership and building a brand that commands $1 trillion valuation?
Whew. Well, I mean, really, when you think about almost anything in life, it's all about the story, right? This is what gets people initially interested. This is what keeps them interested in that topic, and this is what wants them to want to know more, right? And I really think for a good story, you need all those three things.
Yeah.
Right. So when I look at those things, I might look at them a little different than you do yourself, because you're really the top expert when it comes to brands and building and those kind of things, and I look at things more from of the fundamentals and where are we at today with it, and how is that brand viewed and looked at and potentially going forward in the future. But my view is not a building view. So when you look at any of those companies, whether it's the Magnificent Seven or the Fabulous Five, what do you see they did right?
What I see in what they do and what they did, I would put it like this. I look at Apple. You had a Steve Jobs. He was coming out with something that hadn't been utilized before. We weren't utilizing smartphones like a Apple iPhone. That was very new. You were into flip phones. You had a Motorola or a Nokia. It was still a phone. So, but he came out and he presented. Everybody still remembers this probably to this day. It's probably, of all the CEOs and all the different companies, all the techs, everybody remembers when Steve Jobs came out. He wasn't overly dressed. He was very, very plain. But he came out and he said, I'm about to change the world. And he comes out with this Apple phone and he's sliding it with his finger. And you're like, whoa, well, that's interesting. How can he do that? Because it wasn't really a phone. This is where I still think we suffer as far as really calling some like a cell phone what it really is. It's not a phone. It's a computer. It's really just it's a mobile computer is what it is. The phone is just an application, but it was a very popular application, right? But once you can put your email on that phone, it starts changing the game. It could start to communicate much more than just your standard, just, hey, I'm going to put in these 7 digits and get somebody on the phone. Now you had video calling that you could do, video conferencing on the phone. You can get to other applications that you normally would get on your desktop. I remember the day when that happened for me, and when I could get my email and I could get my company applications on my phone, my mobile device, I was sold. This was fantastic. But the way he told the story and the way he continued to tell the story, people were more buying into Steve Jobs than they did anything else. I think Bill Gates did the same thing. These were powerful, personal brands. This is what I'm getting to. I even go before them. I always loved Lee Iacocca. I remember Lee Iacocca today. If you ask me who is the CEO and chairman of the board of Chrysler Corporation today, I'd be like, I don't know. I have zero idea. But I knew that guy because he had a way of leadership, of storytelling to make you go out, and he saved Chrysler. I don't think Chrysler also came out with something super innovative as far as a vehicle, but he came out, put his personal stamp on it, and people began to buy into that. You look at now Facebook, you've got Mark Zuckerberg. Now he's put his face on the brand of Meta, and he went all in on metaverse. It didn't go as successful as he would have liked, as we have seen, but he put a lot of money into it. People say, hey, this is interesting. Not to say it won't come back in some form or shape, but people remember that he was the face of that brand. So you start looking at the face of the brand, And that is really the base of the story. I think businesses fail when they try to like just make it the business to be the face of the brand. Like IBM, for instance. Who's the leader of IBM? Who was ever the leader of IBM? I don't even know. I have zero idea of who or what that is. But I think companies are starting to understand that you're better off when you have an individual who can truly tell your story at a high level and you can get buy-in. And it comes back to that. Valuation is in the eye of the beholder, right? That's what it is. It's a valuation. It's not an actual transaction. And this is what I think people get confused when they look at, well, why is it valued at billions of dollars? And everybody wants that, oh, I want $1 billion valuation. That's potential. You could potentially could be at that level. But can you sell a story that you can see that? Because that's what people, like you said earlier, rumors drive, the markets. So if you can tell a very powerful story and show a proof of concept, this is another important thing, the proof of concept. Remember at the time that Steve Jobs came out with the iPhone, the proof of concept, it was there, but it wasn't highly adopted. Meaning it wasn't, worldwide people weren't buying this type of technology, but then it started to gain steam, momentum, and it started to prove, hey, he's starting to hit these metrics and these numbers, and that would then the valuation goes further and further up. So I think being able to tell that story and have leadership value and be the face of your brand can get you a higher valuation, in my opinion.
Well, Grant, I mean, you hit upon like a dozen things there. And I think that the thing that really, struck me was, like you, I remember Lee Iacocca, and chairman and CEO of Chrysler. He probably wasn't the first, but he's probably the most memorable of the CEOs that became the brand of their company, right? It's probably one of the first and probably one of the best known. And now we have any number of advertisements and commercials that, kind of go that, I'm not only a customer, but I like the business so much I bought the company kind of approach, right?
Right.
Where they actually do that. And, we jump back to the Magnificent Seven here, that most of those companies, there is an individual closely associated with that brand who in effect made the brand, right? I mean, okay, Tesla, Elon Musk, very easy to go. But I mean, if you look at Microsoft, if you look at Amazon, right? You look at these companies and you right away can think of Apple. You can think of, right away the person that made the brand. Now with Nvidia, with the semiconductor company, who could really name their CEO, right?
I couldn't.
Yeah. So they haven't taken, let's say, that route for branding, right? But it seems that it's much more effective now than I think a few decades ago.
No, 100%. And what you said, like in the case of NVIDIA, the end user is not going to an NVIDIA store and buying chips, right? So their client who buys NVIDIA is not the end user, so to speak. Though those are the big tech companies that need these chips to actually power their tech. So they need to be, in front of them for sure. People know that logo when they come out and what it looks like. But if your product or service is definitely utilized by the population at large, that's what you got to look at. Now, here's my question for you. This is interesting because I want to know, in light of all this new tech, is the U.S. still the best place for tech innovation in the world? Because you dwell in the world. And when I look at you, and yes, you're in Florida, you're from New York, you spent time in the Virgin Islands, but you're really out there in the world. Are you seeing maybe a new magnificent collection of companies coming out of maybe Asia, Africa, or the Middle East? I mean, it could change rapidly.
Yeah, and Grant, it's a great point because the world is big, right? there's a lot out there, and when we started off this show, we talked about the Dow, we talked about NASDAQ, we talked about the S&P 500. They're pretty much U.S. centric exchanges, right? Yes, you do get foreign companies that look, in fact, it's prestigious for a foreign company to be able to list on and qualify and list on those exchanges, sure. But most countries have their own stock exchange, right? Where they are buying and selling mostly local companies in those markets, or divisions or companies that are set up by big companies to meet local requirements, so that they will trade that individually, right? So there is a lot of that. But I think if we were to look at Asia, for example, I mean, it would be really easy to come up with a whole different big three or big five or big seven, right? You know, you could look at companies like Ant Financial, right? You could look at companies like SoftBank, right? You could look at companies that, you know, also do the same thing and similar things as Amazon, right? So, you know, you could easily come up with in different parts of the world with these companies. Now, where is that going to go? And to me, there's a few things that influence it, right? So right now, especially in the tech space, we're looking at, to me, two areas where we're going to see advancement and consolidation, right? And most of that consolidation will be through acquisition. So when you become a really big company, right, and you're listed on a stock exchange, and I don't know, we'll take Amazon as an example, right? You're listed on the stock exchange. You know, you need to keep always increasing your performance so that the shareholders are happy and they keep investing in the stock, right?
Yeah.
So in most cases with companies over the $1 billion mark, organic growth, in other words, how they increase their sales internally through their business, is usually not enough to move the market. So the way they have to do it is by acquisition. So I'm a $10 billion company today. If I want to show 10% growth, I have to go out and buy a $1 billion company, right?
Makes sense.
It's going to be very hard for me to show $1 billion of new business in a year without that, right?
You said that. We got to go to break here, Chris. And this is important, but then we'll wrap up, because I think we've hit on some really important points. The audience has got like, yeah, I'm leaning in for what you're telling us. So let's keep that thought. We'll come right back.
Graham, what we'll do is we'll point out a few things that people should be watching going forward.
I love that.
Today we're taking a little vacation on the west end of St. Croix, visiting a seaside restaurant called the Beachside Cafe here at Sandcastles on the Beach.
The atmosphere is just wonderful.
You just feel very welcome when you're here.
Hi!
I'd like to introduce Chris and Ted, who are the owners of Beachside Cafe and also Sandcastles on the Beach. This is amazing!
Thank you.
Sandcastle on the Beach is quiet and friendly, relaxing.
I often entertain guests, and this is the one place I always try to bring people.
Tell us a little bit about the hotel.
Well, the hotel is a 25-room hotel. We have 10 different room types within that. We also have, of course, our greatest asset, the ocean out there, which our side of the island is very calm typically. So it's the best swimming beach and also great for snorkeling.
And just walking, doing a nice walking beach tour.
Absolutely.
Yeah.
Best beach access is right here, so we love them.
And we're also fortunate we have just up the way Sandy Point National Park, and then Frederickstead Town is just a mile away. And so we're really fortunate to be in this perfect spot.
All right, all right, all right.
So nice, so nice. So nice, so nice. Virgin Islands nice. So nice.
All right, Chris. This has been a wonderful segment, and we've got a few minutes left here. And you brought up some great points before our break that you want to give the audience some tidbits of information that they can really start taking a look at their own portfolio and just get some food for thought. What are you thinking?
Well, what I'm thinking is, again, we're talking the Magnificent Seven, right? And when we're discussing them, in general, we're discussing big companies and how do they move, how do they grow? And it's only through growth do they stay attractive to the stock market. And as we went through some examples earlier, they've grown from 2023 at 28% of the S&P 500 to now in 2025, 34%. So how do companies like that and companies a little further down the list continue to grow so that you who are interested in what's going to happen in technology, interested in maybe your own portfolio, can look at? So I look at two things that I believe will happen in the market where we'll see consolidation, and that consolidation will take the form of acquisition. And again, these big billion-dollar companies, the way they can grow now is through acquisition. Okay, so the two areas, of course, AI, artificial intelligence, is one of them. We've already started to see the beginnings of some acquisitions, right? ChatGPT, huge, right? We're going to see a lot more of that in that space. And I'm going to point out just a couple of companies, a couple of names that you might want to keep in mind, right? So in some of that a little lower level of companies, but fast growing ones, are companies like Zendesk, Tiger Analytics, right? Jobot, right? These are companies that we should be thinking about and we should be giving some view to, because it's companies like that will be the acquisitions later this year, next year. These are the kind of companies that will come, the big companies, the Magnificent Seven, for example, will be looking at, because they're big companies, but the Magnificent Seven, their size is, beyond comprehension almost. They have no problem swallowing up any of these companies, right?
Yeah.
And in particular, I like Zendesk as one to be acquired, because Zendesk, what they've made their business doing is providing a service model for companies, right? So if you're a company and you got you make a product, it's a physical product, a lawnmower, okay? When you need service or parts or repairs, right, the manufacturer no longer handles that themselves. it's a company like Zendesk who specializes in that service direct to the consumer and the in-between to the company. So this is an area that every business needs.
Mm-hmm.
And when I look again at the Magnificent Seven, or even a little bit further down on that list, this is the kind of companies they like to look to acquire, because it goes back to what we said earlier. We went from the license model to the subscription model to the recurring revenue model. Zendesk is a company that is built on recurring revenue, right? So,
nice.
And I just pick them out because it's one I happen to like. But you need to look at companies like that. So you need to look at companies that have a business model that can be used kind of across the board, and then has a financial model that is recurring income, right? And when we look at the Magnificent Seven, for them going in the future, there's no stopping them. I mean, they've all gone through, I guess a lot of people call cost cutting. I would call it cost controlling, right?
Yeah.
They've all have strengthened already strong bottom lines, right? They already have a very intricate methodology internally for innovation and for new products, and they're constantly moving down that road. So what's going to stop? Plus, they have money. Okay, and they don't even need money. They have shares. Okay, they can come in and buy you and say, "Hey, listen, I'll give you shares in Amazon. Come on over, join us."
Yeah.
Right?
Yeah,
and that works, right? So it's kind of really interesting. And then AI also presents that same opportunity. I mean, right now you see Apple integrating AI into the newest Apple phones, right? Now, if you look at, in fact, I saw a commercial for Dell. Dell now, we have the AI laptop for you, right? Which will make your life so much simpler. And they're not wrong, right? So anything on the AI side will also be
the layering in of artificial intelligence is already happening at lightning, at breakneck speed. What you talked about, like something like a Zendesk, you're going to start seeing customer service applications. This is what's going to fuel agentic AI, and whoever gets that right is going to be the next big giant. I think maybe they'll become we got the Magnificent Seven, we got the Fabulous Five. I don't know. We're going to have the 8 is enough. Maybe that'll be it. In the agentic AI space. Again, this has been wonderful, Chris. I want to thank you again. Everybody, you got to come back next week. We're talking about these things, and we're going to be talking about some things going on in St. Croix that you can't sleep on. What is happening in the financial markets, financial centers that are going to merge the world of the Caribbean with the USVI and the world, and what we're able to accomplish. So I want to thank you again for being on the show.
Well, Grant, I just want to point out that people don't realize the strategic value that is down in the U.S. Virgin Islands, and I'm looking forward to our conversation.
Absolutely. So again, thank you everybody for tuning in to The Big Picture. We'll be on live every week. This is wonderful. Where are you going to get this kind of entertainment from? A guy from New Jersey, New York, down in Florida. You got a guy that's spent 30 years in Florida, USVI now, and now in Omaha, Nebraska, believe it or not, in the Midwest, the home of Buffett. I'm going to be going by Buffett's house probably a little bit later today. So thank you again for tuning in.
Great, Grant.
Welcome to our TV network, your ultimate destination for all things exciting and essential. From mouth-watering food to the latest in fashion, health, education, music, movies, and news, plus thrilling sports and breathtaking travel. Our TV network brings it all to you. Tune in today and experience the best of every world, all in one place, RTV.network.